Hello. If you own a successful company with cash in the bank, and assuming you're not looking to sell the business, what are the options when you decide to call it a day? Well, firstly, you could pay a large bonus or dividend in order to get the money out of the company, but that's likely to be subject to quite high rates of tax, perhaps 40% or more. So normally there are better options. Another alternative would be to put some money into the director's pension scheme, and that can be quite tax efficient, but there are some considerations to make with that, and so you ought to take advice before doing so. Third alternative is that you can simply draw the money from the company over a number of years, and that can be quite attractive. As a basic rate taxpayer, you could draw that down at 8.75% as dividends. And if your spouse holds shares in the company as well, then they could also take dividends at 8.75% as long as they're basic rate taxpayers. So potentially you could get the best part of £100,000 out per year at 8.75%, which does seem very good. Against that, you have to realise that whilst the company remains open, there will be compliance costs in the form of accounts and returns and so on. So just need to bear that in mind. But the fourth option is what I'm here to talk about really, and that is a voluntary liquidation. The maximum capital gains tax rate currently is 20%, assuming that it's not the sale of a residential property. And it is possible to get that 20% down to 10% if business asset disposal relief is available. So what is business asset disposal relief? In simple terms, if you hold 5% or more of the shares in a trading company for at least 2 years, you may be eligible for the 10% tax rate on those shares, subject to a lifetime limit per individual of £1 million. So potentially that's up to £2 million for a husband and wife company at 10% rate of tax. There are, of course, a number of conditions that need to be met, so do check with an advisor before you go down this route. But yeah, it does look very attractive. If the assets in the company are up to £25,000, then the liquidation can be done very informally. You don't need a liquidator. But if it's more than £25,000, you would need to appoint a formal liquidator. Now, we can recommend a number of those. We do know some very good ones. What I would not recommend is that you go on the internet and use one of the cheap ones off the internet, because you do hand over control of your company and control of the company's bank account. And I certainly would not want to do that to someone I'd never met over the internet, because they could be gone with your money in a flash. So do bear that certainly in mind. So why don't more people close their companies and take 10% tax if it's so good? And why don't they do it more often? Well, in the past, certainly some people used to do that. They would set up a company, get some cash in it, close it, take it 10%, and then do it again and again. And of course, the taxman was not very keen on that, so they have brought in now some targeted anti-avoidance rules to prevent the abuse. But if you are genuinely closing your company, then it is still possible to, well, provided the conditions are met, to get up to £1 million per individual out of the company at just 10% tax. Now, I think that's good news in anyone's eyes. So if you think that may apply to you, or you'd like to talk about that further, please do get in touch.